Hey everybody, it's Ed, and the future is now, and the future is trying to make sense out of this market. Now, I'm going to go over some things in this video that basically the positive sides. Okay, I could get into all the negativity, but there's no need for that in this video specifically. I want to go over basically what's been going on. I've been trying to figure it out logically and make decisions rationally, not in a emotional fashion. So I did what I pretty much always do, which is put it down in writing. So put my ideas on paper. Like, what are the buying pressures that were existing in the market, and what are the buying pressures in the short term? Now, I could go over all the selling pressures that caused the waterfall off in a super short period of time, but that's essentially old news now. I don't really need to talk about that. That already occurred. And, we can debate what happened and who sold and who shorted and what happened, but let's move on to the present and the future so we can make quality decisions in the future. So I have to first give a shout out to one of my subscribers. I'm not going to mention the name, but he knows who he is. And the main thing that he said that shook me up and it really made me think was that the money didn't vanish. Okay, everybody said, "Oh, the market lost trillions of dollars in value." Well, where did it go? What did it like just flush down the drain? Did we just drop it? Was you left it somewhere in under the couch cushions? No, it didn't disappear. Okay, and it didn't disappear in a month span either. So you have to think about it. What happened? The money didn't disappear. So let's assume for a minute, number A2, the big investment firms putting money back to work. Okay, what does that mean? Well, let's say that a lot of them, saw the market turn over and, they put it in cash or in other assets or whatever, and now they want to put it back to work or in the last week or 2 weeks or whatever, that the money has to be put back to work at some point in time. Doesn't mean it has to be put back right now. I'm just saying that that could be a big part of that buying pressure right now is that investment firms could be like, okay, time to put that money back to work. And as a whole, most investment firms are not shorting as a practice. That's not a constant thing. They're long-term investing companies. They're not in it to short. I mean, granted, there's a lot of exceptions to that, but for the most part, they're not shorting. They may short temporarily, or there may be certain firms that short more than others, but for the most part, that's not a normal practice. Okay, they're investing money from their clients, and their clients aren't always going to want to be shorting stocks. Not to mention, most of the time, the market's going up. I mean, percentage wise, the market goes up more than it goes down. That's just a fact. Okay, so you're not going to have your money shorting as much as you're going to have it going long. Now, A3, retail investors who got out before the main fall or, a couple days or a week into the fall, and they just sat their money in cash figuring, oh my God, I might need it for, food or this or that or whatever. I might be out of a job or whatever. And so you have to think about it that, a lot of those people, and I was basically one of them specifically. I mean, I'm not trying to use myself as an example. It's just, that's part of the reality of it. I mean, you have to. I'm not going to leave my money sitting on the sidelines forever. And since it happened so quickly, the fall, it's not like it happened over months and months and months, and it's causing massive long-term damage for the first month. So it's not like I had to specifically, oh my gosh, I have to grab money and move it somewhere and do all this stuff. So, I mean, specifically, I think there's a lot of people out there that are not having to immediately take their money that they've invested in stocks and start buying groceries or whatever. Okay, under A4, short sellers who shorted going down the whole waterfall have to buy back their stocks eventually. So when do they buy back? Well, they're buying back when the market starts going up. They're going to keep waiting and waiting. If the market keeps falling and they keep making money, they're going to keep their shorts on. The minute, well, not the minute, but when the market starts bouncing up, they will have to cover their shorts and eventually get out of that short position, unless they just want to hold on to that short position for a year. And I don't think that's a wise idea, but I just think that that's something that happens a lot when it comes to the short sellers. So they're forced to buy to cover, which drives the market up even more. Now you got A5, which is basically people FOMOing to get back in the market, period. It's like, I mean, they want to get in the market somewhere. They may not know where or what they want to do exactly, but just in general, you want to get your money back in cheaper than you sold it at some point in time. So you're going to have some of that. I don't know how much that plays into it, but people are also sitting at home more. So they're watching the markets every day. Okay, when I sat through the 2008, 2009 recession, I had the market on all the time, constantly, to see what was going on, when things would start to change and evolve. So I was watching it closely, like millions of other people were watching it as well, because it was affecting them all the time. Now, you've got to note that this doesn't happen in a bull market as often. People aren't sitting there staring at the market and how much their stocks went up every single day. Most people don't do that. I mean, they may check week to week or whatever, or even month to month to see what's going on. But in a bull market, you don't really have to babysit it as often. So you're not watching it constantly. And now under A6, stock prices are just cheaper to buy. If the price is cheaper, let's say you wanted to buy a stock like Tesla at 850 or 875 or 900, and then it's like, okay, it's 400, 500, 600, 700. It's less than it was. And I mean, that's just an example, but almost all stocks, there's only a few exceptions that are at all-time highs, but almost all stocks are cheaper now than they were before. So that adds to buying pressure in general. So that goes over what I have for buying pressure that was existing in general. Now, do me a favor and comment on some other buying pressures that were existing in the market, okay, that I'm missing. I mean, I don't think of everything, and honestly, I put this together in a very short period of time. So I'm probably missing a bunch, but I'm talking about major influential things that cause people to buy stocks, not real estate or bonds or other things. Stocks. Why do people buy stocks, in when the market fell? Okay. And now I want to go into the buying pressure in the short term. So under A9, new money from the stimulus. Okay. Not everybody needs to use the stimulus money for groceries or to pay rent or other basic necessities. Not everybody. I mean, a lot of people do have to use it for that specific purposes. But let's say you don't specifically have to use it. I mean, you could just throw it in a checking account where it basically makes nothing, or you could potentially put it in a brokerage account and put it into stocks temporarily until you have the need for it. I mean, it doesn't have to be something that you have to hold in brokerages forever, but in general, that's going to be an issue to drive the short-term buying pressure. Once all these stimulus checks start flowing in, it's not like every one of them is going to be used for that initially. I mean, I'm not personally. I mean, personally, the money will go straight into the Schwab account, into one of the accounts, and it'll sit there and do whatever it's going to do, depending on where it's going to be put. And remember, you're talking trillions of dollars that are put out there from the government to human beings, like a UBI, basically, like the Yang Gang, basically, universal basic income, basically for a month. And if you don't need it for your necessity spending, then you can put it to work. So a lot of people will be putting that money to work. I mean, I don't know. I would have no idea the exact percentages, but I might put a poll in the video just so you can make a guess on that. All right, the oil cut pressure. Obviously, the oil cuts of the 10 million barrels, that was pretty big, okay? And whether we like it or not, I put that under the note that oil moves the world right now. It does. This doesn't have to be forever. I mean, most things can be made electric. But right now, oil still moves the world. So anything that we do, plus or minus with oil, is going to drive pressures in the market, buying and selling. So A11 under interest rate cuts, that makes buying more appealing. Now, I'm going to use a specific example for me because, it's going to affect our household into the tune of thousands of dollars worth of interest. Okay, we are buying a Model 3 Performance Tesla. Now, obviously, it would be nice if our interest was virtually nothing on that vehicle versus maybe costing five, six, seven, $8,000 over the course of a loan, 10,000 maybe. So we are personally in the process of making sure our credit's maximized to excellent, making sure that we have any down payment that we need to maybe put down to reduce the cost as well, and getting the vehicle at a lowest possible interest rate before interest rates go up. If they ever go back up, I would rather buy the vehicle on a low to zero to negative interest rate, base interest rate. So, I mean, we'll see how that goes, and I will definitely go into detail when we buy the car and everything about it on a video and whatnot. Okay, now under A12, going back to work means you can't day trade and you have to commit to something. So if you're going to be in the market at all and you are going back to work potentially in 2 weeks or a month or even a month and a half or 2 months, if you're going back to work and you temporarily trade the markets or whatever, you're going to have to make a commitment and do something, either put it all in cash or buy your stocks or whatever. So that could be some sort of commitment to actually buying and holding versus trading in and out of the market. Okay, so that's, and right now there's just more traders out there because a lot more people are sitting at home, so, that's just an inevitability there. Finally, in the short term, people are redistributing their money into different companies potentially or different avenues, whether it be from Bitcoin or gold or healthcare or so people are changing their companies in what they're doing. So I mean, I've moved from all kinds of different long positions, short positions, gold and whatnot, all kinds of different healthcare. So I've been dabbling in a lot of different things, but so people in different companies are redistributing assets and money, and that's definitely causing people. And I put it as a note: they're basically selling off some of their garbage stocks that they don't want, and they're buying their quality or best in breed stocks, momentum stocks, or they're choosing healthcare, whatever. There's all kinds of ways, like I said, to make money no matter what the market's doing. So I hope you guys liked the video. I'm trying to keep it short on this one, but I definitely wanted to talk about all the buying pressures that I saw going down as opposed to a bull market. They're totally different. Okay, and in the short term as well, they're also different. So do me a favor and put down in the comments any buying pressures that you think are absolutely imperative. So always remember, all of our spreadsheets are free, and for any video that we have, and we have those available, you can just email Tesla Stock 2021 at gmail.com, and you can get any information you need. And make sure you be safe out there. Take care.